Welcome to Digital Asset News. Take the top stories in cryptocurrency and digital assets and break them down into bite-sized pieces. Today, we've got some pretty great stuff. I'm going to give you 3 stories that are going to be going over how market manipulation is destroying the actual traditional markets and what's going to happen to actually lead us to the inevitable conclusion that cryptocurrency and digital assets are not only here to stay, but they're going to dominate over the next 2 to 30 years. So let's jump in. First up, CoinMarketCap, nothing's really going on too extravagant. Bitcoin's up from 75.76 to 77.40, so that's great. Ethereum is just on that, just teetering. It's almost at a 200, but it's dropped a little bit, and no one's really been a breakout, so that's how it is. The S&P 500, a little bit up. I don't understand why, but sure. Unemployment rate is through the roof, and all these new programs that are coming out are still lacking, so whatever. But I think when we go into these articles, you're going to see why all this stuff is happening, what's really going on, and what's going on behind the curtains, and where this inevitably is going to lead us all to. So let's jump in today, right now. So first up, influential investor calls out market manipulation, the US dollar, the Cantillon effect, and the Bitcoin factor in May Day tweet storm. So this is from Preston Pysh, and he's co-founder and host of the Investors Podcast Network. And I was like, well, who is this guy? I don't know this guy. So Preston Pysh, graduate of West Point, great, Johns Hopkins University. He's the founder of Buffett's Books.com, and his videos on financial investing have been viewed by millions of people around the world. So great, he's one of those guys. Fantastic. So to me, it sounds like he's a Buffett guy, and he's probably got some sound investing tips to give us, or sound investing advice. I don't expect him to talk too much about Bitcoin and cryptocurrencies, but I was totally wrong. So let's jump in. In a new tweet storm, the Bitcoin supporter joins a chorus of analysts who are pointing to traditional monetary policy and the massive pandemic-inspired stimulus packages as a big balls of thread that are bound to unravel. Through a series of twists, turns, and manipulations, Pysh believes governments' efforts to prop up markets and national currencies could trigger blowback, social unrest, more monetary abuse, and more wealth inequality. I cannot agree more, as drastic measures unwittingly reconfigure the global financial system and spur a rush to alternative stores of value, which could give Bitcoin legs. The West Point and Johns Hopkins University grad, whose videos on investing have reached millions, also references the Cantillon effect. So if you don't know, Cantillon effect, it pretty much goes like this. All the big boys and girls, they all get together and say, hey, give us money. And the Fed gives them money, just like we just saw right now. When it first hits the very top, that's when it has the most value, and that's when they get all that great money, which has all that value, and they can do whatever they want with it. But then when it trickles down to the lower class people, and they get to it, and they say, oh, we finally got those peanuts that you guys give us, or these breadcrumbs, thanks. It's not worth as much as when those first big people got it. That's pretty much the Cantillon effect in a nutshell. Tell me where I'm wrong. Tell me in the comment section. That's what I got out of it. So moving on, Pysh says investors are currently in the thick of manipulated market conditions. He says, let's face the facts. You are not participating in free and open markets. So what's an investor to do? Here's a couple of important aspects I think people should consider based on the current environment. First, I think it's important for people to realize global governments are providing large amounts of stimulus. Thanks. Massive amounts of stimulus. As you can see in this chart, the trend of stimulus has been going strong for more than a decade, and it's not letting up. In fact, it might even be accelerating. So what does it mean for stocks? Well, to date has meant that the consolidation of earnings power into the hands of the few. Check out this chart from Lynn Alden. And this is going to break into our next story. We're going to start to talk about the S&P 500, how it should be the top 500 companies, but it's not. I mean, it's really not. It's just 5. 5 makes up, a vast or a big bulk of it, and the rest are just kind of teetering on the outskirts. So it's like, what's the problem? Or not what's the problem? What's the point? Anyhow, not only that, but it appears the consolidation is especially advantageous for companies with intangible assets that are difficult for competitors to impair, i.e. Google AdWords, Apple's strong network effect for apps, Amazon's AI software, which gets smarter with more shoppers and more data, etc. Throughout this period of time, which is the last 10 years, value investing has been punished. I suspect the speed at which technology is moving is causing many of the competitive advantages of undercapitalized companies to get eroded quicker than historical periods. And I couldn't agree more. When I was growing up, it was all about taking your money and just slowly investing into it, or saving. If you remember that, just save your money. It'll be okay. Just put it in the bank. Just put in a nice savings account. You'll be good. Well, there's the problem. The problem is that the money has you get taxed a second time. It's called inflation. And every time your money just sits there and does nothing, it's like you're not really saving. It's just eroding away. It's almost like dust. So as time has gone on, I've seen just how ridiculous that whole prospect is, and I see how the inequality has far-reaching effects throughout not just this country, but around the entire globe. All right, moving on. Pish points to the NASDAQ, which turned green on April 6th, and to the handful of tech giants, again, Microsoft, Apple, Amazon, Alphabet, and Facebook, driving the quote-unquote growth and sucking the competition in their black hole at an accelerated pace. He says, well, I'm not going to read the whole thing, but he just says that, look, all these companies, for some reason, are going green. And it doesn't make any sense because what we see that is happening with normal, everyday, average people is not mimicking what is happening with the actual stock market. The stock market should be a relative indication of how strong the economy is, and it's not. The economy is stagnant. There's nothing really moving in it. And there's just a downward spiral. The only thing that's really saving it is just helicopter money. And as time, it's going to run out. It's going to be what I think is going to be like a zombie market because nothing's going to really be produced. GDP is going to go not just flat, it's going to start to decline rapidly. And it's going to be worse than 2000, 2008, and maybe even 1929, the Great Depression. But that's just my thoughts. So let's just go down here to where it gets good. He says this break will either be complete social unrest due to the overuse of quantitative easing and UBI, or through the natural transition to a different form of money, i.e. Bitcoin, a new gold standard, or some special drawing rights that can somehow miraculously impose a peg to domestic fiat. And I couldn't agree more. We can see that, well, first of all, and I've talked about this in my last 3 or 4 videos, Bitcoin cannot be the main world reserve currency right now. It's too slow. If we just stop using the dollar, it's not going to work like that. It needs to be faster. However, if it could be pegged to something, then that could be a whole new game changer. I believe it's a great store of value. And I think as time has gone on, the reason why is because I talked about this before is trust. It's been battle tested, and trust is a currency that you can't buy. And it's been going strong for over 10 years now. It's unhackable, it's fungible, it's divisible, it's deflationary, it's transferable, it's accessible. I mean, it's great, for what it is. Just that I don't think we can use it for payments right now the way it is. I think it would just crumble. So moving on, he says, even if social unrest happens first, it'll still result in the need for a new form of pegged currency to fix the situation we are currently experiencing. Based on that, I suspect Bitcoin has the highest probability of succeeding simply because it's the option none of the governments want, but it's also the solution they can't easily stop. And it also poses a huge benefit for the first countries that would adopt it. Effectively, it imposes a tragedy of the common situation for nation-state central planners and fiscal appropriators. All right, moving down. So to sum it all up, here's what he says. So based on these manipulated markets, here's my conclusion. I like Bitcoin and I like gold until the start of 2021. I see it like this, and I said this last time. I see Bitcoin and gold working together. And I said, maybe it's like Batman and Robin. I go, no, that doesn't make any sense. Maybe like Batman and Batman. And then someone goes, what it really is? It's like Batman and Superman. One has good qualities that the other one doesn't have, but they're both awesome. And I got to agree. I like gold. Been around for thousands of years. I think some of you out there that listen to these videos like gold as well. I think it's going to be here. I think it's a choice for an older generation or a generation that just takes a look at it, says this has been around for a long time. I trust that. Bitcoin, this has been around for 10 years. I trust that too for what we just talked about. And if you can use them both, why not? They're both a pretty good store of value. So let's use both of them and, use those together. He says, 2, bonds totally suck. Agree. 3, a few stocks will work. Most won't. 4, commodities will be insanely volatile. Pish adds that he expects Bitcoin to start biting into gold's market share in the early part of 2021, with Bitcoin surpassing its previous all-time high of 20,000. I don't think he said exactly when, but I can see that. So gold, its market cap is 8 trillion, 7 to 8 trillion, maybe even 10, I can't remember. So I don't see a reason why Bitcoin can't take at least half of that. just by what we talked about. So remember what we just said in this article, because it's going to pay dividends when we talk about the next one. So let's break into it. Next up, Bitcoin correction fears intensify as Goldman Sachs warns a chilling stocks downturn. Risk of a sharp Bitcoin price correction are growing as U.S. stocks paint a similarly bleak market scenario. Strategists at Goldman Sachs found that the 5 largest companies now cover 20% of the S&P 500 index's market capitalization. 5. So what are they? Let's just take a look. So they are Microsoft, Apple, Google, Amazon, and Facebook. They collectively added $4.4 trillion in the market cap gains since 2013 and are the 5 largest in the S&P 500. 5. That's it. 5 companies are 1/5 of the whole market of the S&P 500. That's amazing. And that's also scary at the same time. So that has narrowed the market breadth below levels that historically signal less than expected market returns, followed by full momentum reversals. Analyst David Costin noted that the breadth fractal last appeared ahead of the recessions in 1990, 2008, during the slowdowns in 2011 and 2016, and in the tech bubble. So here's the troubles. Goldman Sachs' bearish statement followed weeks of growing positive correlation between the U.S. stocks and Bitcoin. And this was actually recorded by, I believe it's Cointelegraph. Yep, or Coinmetrics. Bitcoin and S&P's 500's positive relationship has hit record highs. Currently on a scale of -1 to +1, the S&P 500 Bitcoin's correlation efficient sits at a record high of 0.17, with some analysts suggesting that investors are using Bitcoin's profits to cover their margin positions. That's awful. So here's my question to everybody. Do you think that's the case? With all the reports that we've seen, such as Grayscale's report stating that institutional investors are here in large numbers, do you think that these investors on the traditional market will start to dump at the slightest chance, or the slightest hint of a reversal in the traditional markets? Do you think that would happen? Me personally, I don't see any other way around it. And how do we know that institutional investors are here? Well, this was actually from Grayscale, their digital asset investment report, Q1 2020, which just came out a couple weeks ago. Total assets under management, $2.2 billion, just a little measly. Here's their first quarter of 2020. The majority of investments, 88%, came from institutional investors, dominated by hedge funds. The previous 12 months, the majority of investments, 79%, came from institutional investors, dominated by hedge funds. So I personally believe that when the S&P 500, the Dow goes down, the traditional market goes down, we're also going to see that also go down with cryptocurrency digital assets, because a lot of those institutional investors have a little ace in the hole where they can liquefy all their positions and take money out of this market and cover their other positions in the traditional market. Just my 2 cents. I could be wrong. Let me know in the comments section. Moving on. The analogy treats the S&P's 500 move as a predictive indicator in the Bitcoin market. That means if the U.S. benchmark falls, it tends to prompt investors to liquidate their Bitcoin positions for short-term profits, leading to declines in the cryptocurrency spot rates. Again, let me know what you think. Meanwhile, Bitcoin remains negatively correlated to the U.S. dollar index that tracks the greenback's performance against a basket of foreign currencies. And that makes sense. The more people use the dollar, the less people probably use Bitcoin. So I could see that. The technical fit, the gloomy trend of the U.S. stock market places the cryptocurrency market at risk of a significant pullback. But experts believe that Bitcoin would break its short-term correlation with the S&P 500, mainly owing to its distinctive factors. And this is from one of the Winklevoss twins, Cameron. He says, U.S. dollar is a global unit of account, yet it is quickly losing all accountability and credibility. An alternative benchmark with a fixed and deterministic supply is necessary. Yeah, I'm talking about Bitcoin. And when I first read that, I'm like, well, of course he's going to say that, Of course he's going to say that because he's the Winklevoss twin and he owns Gemini. So, of course, he wants his, project to do good. And I started to think about, I remember when the twins said you should short Bitcoin. And I thought that they had said that during the bull run of 2017. And I looked it up, and it was actually during May of 2018, pretty much when it wasn't doing the hottest. And so when I read that, and I looked at some of their other comments, I think I was wrong about them. I think when I looked I think these guys are just really, they really believe in Bitcoin and they want it to succeed. They want, I think, cryptocurrency to succeed in general. So sometimes they're just not right. Anyhow, moving on. The cryptocurrency will undergo a scheduled supply rate cut in May 2020, also known as the halving, which is going to happen at the same time when the Federal Reserve will be oversupplying their banking system with trillions of US dollars. So there's an expectation of scarcity of Bitcoin. And that's what I think too. I think personally, this is the ace in the hole. But the Bitcoin halving is going to happen on May 12th, around that time. So the day after, May 13th, May 14th, whenever it is, I don't think the prices are going to skyrocket. It just doesn't work like that. I think, personally, it's going to go anywhere from 6 months to 2 years to where we start to see fireworks. And I'm going to tell you why. So for those of you who have seen this, I'm sorry I have to show it again for those who have not, but this is our first, second, and third halvings. And it breaks it all down by dates and increase as far as the price. So the first halving, the very first halving Bitcoin ever did was in 2012. That was November 20th, 2012. And then it took 1 year to hit an all-time high on December 2013. So it went from $12 to $1,000 roughly. Let's just go with round numbers because I'm not that smart. I need round numbers. That's pretty good, right? That's about 8,000% increase. The second halving, that happened in 2016, and then it took about a year and a half until December 16, 2017, and it went up about 3,000%. So it went from 650 to almost 20,000. That's pretty good. So the first halving was a year, the second halving was a year and a half. So I'm thinking the third halving, if it follows everything's suit, maybe it'll be 2 years. Now, I don't know if that's going to happen, especially with what's going on in the world right now with quantitative easing. It could be 6 months. We could go, instead of going a year to a year and a half, maybe it just jumps back to 6 months. Maybe it takes 8, maybe it takes 9, maybe it takes 2. I don't know. But I can tell you this. If you go from the percentage increase from the first one to the second one, that's about a third, okay? 3,000 to around 8,000, that's about a third, right? So we drop this by about a third, so we get 1,000%. I think the date of the halving, the price of the halving, it's not going to be 10,000. It's going to be about around 8 maybe. So if we go up by 10x, 80,000 to 10,000 to 100,000. That's what I see conservatively. Let me know what you think in the comments section. Let's move on. And last up, Ethereum 2.0 on the right path as number of hodlers accelerate. So again, more good news. Now, all that stuff we just talked about, it's pretty bad news for the traditional market. I think it's heavily manipulated. I mean, everybody talks about how cryptocurrency is manipulated, but I got to tell you, the biggest crooks and scammers out there, they're already over there on Wall Street. So they got nothing. They got nothing on us. Anyhow, Ethereum network. Ethereum network is about to roll out Ethereum 2.0, hopefully. This is going to go in favor of proof of stake, offering a new consensus mechanism that will reduce the network complexity, making it possible to execute faster and cheaper transactions. So if you don't know, Ethereum is going to go from proof of work, same thing as Bitcoin, same thing as a lot of different cryptocurrencies that are mined, just a proof of stake. And they want to do that because they want to make things simple, faster, cheaper, all that good stuff. And I, for one, cannot wait for it to happen. This is going to be great. We'll see how long it takes. According to Glassnode, there are currently 116,426 addresses with 32 ETH or more, which represent an increase of at least 14% so far this year, making it, this is a number of potential ETH 2.0 validators. So taking a look at this pic, let's blow this up because I can't see it. All right. So from September 5th, 2015 all the way to now, this was the increase of Ethereum addresses with balances of more than 32 ETH. Why is that so important? Well, it's because, as laid out by Vitalik Buterin, co-founder of Ethereum, so that users with a minimum hold of 32 ETH, which was 16,000 back in 2018, will be rewarded once Ethereum switches to proof of stake. And he says this in a tweet, and 32 is a number that's been thrown around everywhere. So even though now ETH is moving around, it's almost $200, right? And it hasn't really stopped as a result of the upcoming ETH 2.0 event, which is expected to take place in the next few days of Q2 this year. So April, May, June, somewhere around there. But I will say this. So this is supposed to happen in Q2, all right? I'm not holding my breath. If you've been around for a while, Ethereum and Cardano are notorious for moving the goalposts. They say that's going to happen, this quarter. And they're like, well, maybe quarter 3. Well, maybe quarter 1 next year. Who knows? So if this happens, I'll be impressed. I mean, honestly, if they can hit their goal for once, that'd be awesome. We'll see. But so all this stuff is good. We'd like to hear about this. But let's get down to it. How much am I going to make? How much is it going to be worth to me? So I found this handy-dandy website called stakingrewards.com. And it's pretty cool. So you just put in like how much you have. So let's say I have 32 ETH. And I do have 32 ETH as a matter of fact. I have a little bit more than that. And for 32 ETH, which is worth 6,200. Wow, 6,200. Listen, I got to tell you, that's not squat. Because in 2017, one Ethereum was worth like $1,400. Somewhere around there, $1,400. So if you take that times 30, what at 1420, that's like 43,000, somewhere, I don't know, 42,000. That's a lot of money. Now only $6,200. So 32 ETH. If you have $6,200 just laying around, sure, why not? And what's great about that is, so if you have 32 ETH and you stake it, your monthly earning is going to be about 1/5 of an Ethereum, or for the year, $444. Now that's at today's price. So let's say that one Ethereum gets to be, I don't know, 5,000. I personally believe it's going to be 10,000. So if it's, let's just say 5,000. So 1/5 of 5,000, that's a grand per month that you're going to make. Not too bad. And that's if you have 32 ETH. So let's say right now you get a little crazy and you have 100 ETH and you stake all that. So every month you would be making roughly about half an Ethereum. And again, if it's 5,000, that's $2,500 per month. That's not bad. That is not bad. And all you need is around almost $20,000. So the reward's going to be about 7%, score, whatever else. And it kind of breaks everything down below here. So I'm going to link that in the comment section below. So look, that's it. I know that in the beginning it was kind of doom and gloom, but you have to understand that sometimes to make an omelet, you have to break a few eggs, even if those eggs are the traditional market. And I don't see any way that this traditional market is going to bounce back anytime soon and be super awesome and everything else. I see it like a car accident. I do. It only takes a second to get into a car accident, but it takes a long time to repair everything because of that said car accident. But we will see. All right, if you like these types of videos, there are going to be 2 more that's going to pop up to your left and right. And that's it for today. So thanks for watching. See you on the next one.